Unfortunately, when it comes to history, history begins and ends for most people on the day they were born and the day they died. So for a millennial that, may have been maybe 10 years old back in 2008 or maybe 15 years old, there isn't much financial history in his mind or her mind about what happened during the crash of '08, if you want to call it that, and certainly not in the .com. So what I've done is to create a chart that does not lie and that will depict what was going on with the markets in '08, and more importantly, compare the S&P on a weekly basis to other markets. And what we're looking for, were there any telltale signs? Was there a break? Was there divergences, either up or down, of the S&P with other markets that might give us some clues or hints to where we are today? I'm Bagger Don at StockMarketCaddy.com. Today is September 1 and it's 11 p.m. But you're looking at a chart of the S&P on a weekly that actually ends at around 2010. Now it goes back years, but I wanted to get a snapshot of the S&P riding up into 2008, and then this is that crash, this is the V bottom. So this is not a current up-to-date chart. We're going to first take a look at what happened up here and what we could have learned, or what can we learn from the break in this market. And the way that we do that is we insert two symbols: a weekly S&P going back 50 years but ending, I'll show you in a moment, and then we're going to look at FedEx. The reason why we look at FedEx, because FedEx serves as a great proxy to the transportation stocks. But we have stopped this chart at, so be clear, in 2009, September of 2009. This is when the market actually bottomed. So we just want to examine what was going on. So the candles are the S&P on a weekly basis. The yellow line is FedEx, also on a weekly basis. So you can see the S&P from 100 all the way up to its weekly highs up in this area. In fact, this little break up here, this was in July. It kind of broke down, and we got a similar reaction. There was Ben Bernanke was our new Fed chairman. He had some nice words to say out at Jackson Hole. Very similar to our current new chairman of the Federal Reserve. Had some kind words to say, and up the market went. You can see there was a little inverted hammer right here. And what was that date? That date was the week of October 12th. This is a weekly chart. But on the lead up, FedEx ran right with the markets. Many times it was above the market, actually pulling the market higher. But notice what happened right in here. Now there were some breakdowns, but they were short-lived right in here. Here, FedEx breaks with the market pulls back, and then FedEx resumes her run, and the transports and the market continues to run. The market was at that time, was very influenced by FedEx, because even as FedEx ran up here, almost double topped and then came down, so did the market. But it's right in here. Do you notice right here where FedEx starts on a weekly basis to break down significantly and never comes back? And the market continued higher until it couldn't any longer. And then the market broke And you might say FedEx led the entire market down. Pretty interesting. Now that's just FedEx. So we can do this one of two ways. We can compare, but why don't we do it this way? Why don't we go back to our format settings, and rather than cutting it off on 9/1, let's get it to today. And then we'll look at a couple of other divergences. What's happening today between the S&P and FedEx? Interesting, huh? Ran very much with the market, came down, market came down with it. FedEx resumed her run, market resumed her run. FedEx peaked, came down, market came down. FedEx peaked, lower peak, significant break in FedEx. FedEx comes back a little bit, peaks again last week, and looks like she wants to decline. What is the market doing? Just what it did in 08. Diverging, heading up without the leading transport company. Is this a canary? We think it is. If FedEx continues to break down, the S&P is going to catch up with it. Keep an eye on FedEx. Let's go back, reset our settings, and let's set them for, we gotta set that for 2009. And I don't know the results of these. I'm curious myself. So we got a weekly 2009. We're going to change FedEx, and I want to see the EEM, the emerging markets. What was happening with them? And I have no idea. I really don't. Now, this is the S&P. This was the emerging markets. S&P topped out. Emerging markets topped out. You might say they were correlated, positively correlated. When our markets recovered, the EEM recovered. Interesting. Let's change the format to, or bring it up to date to, got to bring up both of them to today. Let's close. EEM, going with the market. EEM broke down. Actually broke down in advance of the S&P, and this was a pullback back in before middle of 2015, 2016. Our markets recover, EEM recovers. EEM breaks down with our markets. EEM continues to break down. What the hell is this? Divergence. Going up while the world markets are going down. Interesting. And we're looking at this. So let's go back with something major. So we're looking at FedEx. We choose FedEx to represent the transports. And we choose the EEM because it affects the rest of the world. It's the rest of the world. We're going to set that at 2000 no, I want that at 2009. Let's see if we can do this again here. 2009. So we think would be a pretty important correlation. And this reset too. Let's change this now. And how about the US dollar? What is going on with the US dollar that we can tell? I only have about 10 or 15 minutes on YouTube. By the way, you want to set these on high definition. Our private members get videos like this virtually all the time, but they're much higher quality because we pay for a specialized hosting service. Okay, so this is a little interesting. This is back in the crash of '08, you can see the dollar started to really deteriorate here. I'm not sure this, well, I mean, one could say that they were going to try to lessen, they anticipated what was crashing and got to weaken the dollar. Dollar broke with the market. Um, I'm not so sure, but let's take a look. We'll go to Format and see if there's anything. Oops. We want to Format. We want to go to Scale. No, we want to go to, I'm sorry, Today. Update it to today's chart. It updates them both at the same time. Saves me some work. And what do we have? We had a strengthening dollar. Our market continued up. And here we have a dollar that broke down. And here we have a strengthening dollar. I'm not sure that I see any correlation in '09 or anything really today. I do know that I don't think our market likes a strengthening dollar. It's going to be very expensive and very hard to sell products overseas, especially if those markets are getting hit. But I don't see anything distinct. Now, the last one we'll look at, what about treasuries, the 10-year treasury? Or we could even look at the VIX too. Let's look at the 10-year treasury. Let's set this back to 2009. And oops, we don't want to change that. We want to change this. Then Format. We'll set it to the 10-year treasury. And let's see what we see here back in '09. Well, they actually were going together. Treasury started to rise. It's kind of interesting. People say that, treasuries and stocks, move in opposite directions. Not for this length of time, they didn't. And then as the markets broke down, treasuries rose. And then as the market started to rise here, treasuries started to come down. This is where the QE, the buying of the bonds, started. Well, let's take a look and see what we can glean today. So we got to change this, again, the date to today. It'll change them for both. And let's see what we see. Well, we see the positive correlation here. And stocks and treasuries were going up together. And then treasuries start to come down as rates start to rise. Then we're positively correlated. And now we're breaking down. Well, stands to me up until this point, I don't know about you, but my eyes seem to see a market or markets that were moving in tandem as the indices were rising, or as the stocks were rising, the S&P, so weren't the 10-year treasury up until right here. And then treasuries have diverged, look like they're going to leg back down, and yet the markets are doing something on their own. Now the last one is going to be, I think, the most interesting of them all, is the VIX. First thing is we got to change the date, 2009, and we want to change the symbol that we're looking at to the VIX futures, which is VX. And I'm running out of time, so I'll be quick. So here, as you can see, the market was going up. Everything was beautiful in the world. And look, the VIX was going down, going down, going down. Suddenly, right in here, the VIX starts to get elevated. Market, boom, crack, J-hole, everything's fine. Supposedly. Look at what happens to the VIX. The VIX stays elevated here. Actually starts to come down. The market is already breaking, and then all hell breaks loose. it turns out it wasn't really much of a leading indicator, was it? But let's look at today and we'll call it a night. Let's change the date to today. We'll hit OK, and then we'll close. This is very interesting to us because we have had for the last years, all perspective, VIX constantly going down and the market constantly going up. Here we had a spike in the VIX and the market struggled. What is interesting to us is the market is going higher and higher and higher, higher than here, yet the VIX is hanging here. It's not lower than here. So we do have some divergence. For us, and our point of view, the biggest tell could be the FedEx that transports itself. That divergence could be the VIX, could be the EEM to what's going on today. So keep an eye on FedEx, EEM, the VIX. I would think I'd also keep an eye on the dollar as well. This little candle up here is a weekly candle. There's a gap. It's a little inverted hammer. Most gap ups get filled and get filled rather quickly. If it gets filled next week and it holds, we could go higher. No question about it. If we gap down or this gap doesn't hold, very possible that we could see a sweeping down move. These happen very, very quickly from extreme positions. 1, 2 weeks down 10%. Boom. You got to be on your toes. Good luck. If you like this sort of approach to the markets, calm, deliberate, objective, precise, without emotion, without a whole lot of noise, and something new, and if you learned a little something, feel free to check us out. I'm Bag of Don at Stock Market Caddy. Our base membership is just $99 a month. Get a 1-hour video plus Sunday to Thursday. Level 2 members get all of that, plus all of our proprietary programs, strategies, indicators, and also access to our swing machine intraday and access to us. We don't make specific recommendations to buy or sell anything. We are a mentoring site. Good luck.